Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 18th of December, hanging out on a Tuesday, and hanging out is kind of what the market did today. Fairly uneventful for the most part, as we kind of, seems like maybe the market's looking toward tomorrow's Fed announcement to give it a little bit of clarity one way or the other. I don't know if it's going to get it, but it should be interesting to see what happens, because they're certainly watching for it. On the earnings front, we do have a handful of S&P companies coming out with earnings tonight or tomorrow before the open. Tonight, Micron and FedEx, and tomorrow before the open, we have General Mills and who is our other one? General Mills and Paychex. Paychex is who. So should be interesting to see a little bit of earnings activity here going into tomorrow. But again, I think on an individual company level, sure, people who own General Mills are going to be interested in. But from a broad perspective, I think we're probably all waiting to see what the Fed does and how the market reacts to it. So it should be fun tomorrow in the recap to see what, if any, craziness transpired. So over in our indexes, really kind of back and forth day, tried to gap up on the open, and no one was having it, wasn't able to hold. Really, if you take a look at the kind of intraday action that we were seeing on the indexes, had our gap up on the open, kind of hovered before kind of giving up and kind of closing pretty darn flat before the day was done, as we're kind of continuing to hang around at this old support level. I don't think you could say we broke it. I think you could say we breached it maybe, but I don't think you can say we broke it just yet. And of course, as we've talked about before, looking at this from a little longer term perspective, that's a fairly important, at least in my eyes, level of support to be watching out for. So again, I think we're just going to have to see how the market responds tomorrow before you get too crazy one way or another. I don't think the market would be opposed to having an excuse to buy, even if it was short term, but it doesn't need an excuse to sell these days, clearly. Over in the NASDAQ, very similar situation. Unlike the S&P, which is kind of testing support, the Russell, which has already broken support, we're seeing the NASDAQ still a little bit away from that longer term support level. Held its own here today, maybe a little bit better than some of the other indexes closing up. But again, really the same type of a situation where gapped up and there was just no momentum, nobody willing to jump in to get things going. Very similar with the Dow. We haven't tested that support level just yet. We don't really have a lot to hold us up until we get to that support level. As here today on the intraday, we kind of use this old low as our intraday high, as is so often the case. So really, we haven't seen much of a change from a technical point of view in the market today after kind of a dull day in the market. Russell continues to struggle on the index that closed technically down on the day on a pretty ugly candle, right? After kind of running up, trying to get things going, really sold off closing near the lows. That index, of course, is the most far gone, at least from a bearish point of view, clearly has broken, its support level, a while back. Again, we don't have a lot of support until we get into that, in my opinion, at least that 1350 range is really that next level of support. And good afternoon, Ed, and good afternoon, everybody. I hope you all had a great day trading and didn't get put to sleep. Days like today so often are the norm, but in this market, nothing normal about it, right? The market's not going crazy. What are we supposed to do with our time? But not a lot has changed going into that Fed meeting from a broad market perspective. And for the most part, our sectors look very, very similar to where they were yesterday too, with maybe an exception. As we look at the materials sector, continues to hang around that previous low. Not a lot of people willing to buy just yet into it, but we've now seen that support level has held in the form of yesterday where it was really selling into it. And then here today, as we've just kind of been hanging around. So not a lot has changed over there. Clearly that is I think a fairly significant level of support. It's not a crystal clear one, as we've kind of talked about before. It's more definitely more of a zone. While we can look at the low, on the daily chart as kind of a support level, I think we could look at it on a weekly chart and say that we've failed the breakout. But I think you could also make the argument that we're still there. So still a little, hard to read with absolute certainty. I don't think we've broken that support just yet, but this is a pretty ugly weekly chart. At the same time, if this fails, we kind of talked about it yesterday, there is definitely more room for the material sector to go down. Energy really continues to struggle as crude continues to sell off. To nobody's surprise, it broke 50, and of course, no one's buying, at least in the short term. Definitely feeling that over in the energy sector. We came very, very, very close to catching this old level of support. Probably best to look at it on a weekly because we have to go way back here today, closing just above that. Again, if this falters, there's just not a lot to prop it up until we get down. And this was going to be a little tougher read because we didn't have a nice clean price. We saw a lot of back and forth action when we reversed from our last oil sell-off. But somewhere down in that 52-ish type of range, I would say, is kind of that next level of support. Let's keep an eye on that, see how it responds. But we are clearly in bearish conditions in the energy sector, as we have been for quite some time. Right above that next level of support. Over in the financials, kind of very similar to materials in the form of holding that support level at least for one more day. There is more room if that falters. Little clearer path, I think, as we kind of look at how far it should drop. Energy, well, Lord knows that it could go as low as it wants, right? Financial, sure, everything can, but I think we have a clear idea of where, our next stop should be if we falter at this little support level. Should not have much of a problem running back down into these old lows back here. Industrials, tough one. This one is really tough because, again, let's go to the weekly chart. We took out, the shortest term support level, right? Even in the form of yesterday's, of that low point from back here yesterday. But when we look at it from a longer time frame, again, it's kind of hard to gauge if this is a major level or not. Really, I don't think it's a major level of support. I think really our next support zone on the industrial sector as a whole is down at $64 at that weekly 200 period moving average personally. But there is a little bit of stuff that I think maybe you could make an argument for. I don't feel comfortable making that argument just yet. Again, just not as ugly as yesterday, but we didn't really see anything to clean us up. Very undecided day over in tech, dojing back and forth and really going nowhere. So again, not a whole lot has changed. This is a fairly respectable, in my mind, zone of support. But again, kind of like the industrials, kind of hard to pinpoint it. I always like when my charts are clean and I can kind of, even though I always think support is more of a zone than a number, I like when I can give it a number, if that makes sense. So when there's, a bunch of, shadows or tails and things like that, just a little harder read for everybody, I think. But tech really kind of still hanging around that zone here today. Now, staples, yesterday, of course, we saw them break down. We kind of looked at this, potential trend line lining up with that 200-day moving average as a potential area that might interest some bulls. Very easily, very quickly took that away from anybody who was thinking that might be the case, closing well below the 200 and that trend line. This has gone from being bullish to bearish, fairly quickly. That support break was a big deal in my opinion. Now all of a sudden, I'm going to be watching for that retrace into this trend line, into that 200-day moving average, into some falling short-term averages that we're going to catch up with us in the days to come. If you're trading within this, and I know a lot of us were looking at this from a bullish point of view just as early as 2 weeks ago, I think you have to be very careful with this. This is a pretty ugly pattern, at least in my personal opinion. We've made lower highs, we've made lower lows, we've taken out levels of support, trend lines, moving averages, without really even putting up a fight. And hey, maybe yesterday when the whole market was selling off, okay, I get it. Well, you were at support, you took it out. But today, when there's a lot of just hanging around, and sure, Johnson & Johnson not being, on their best behavior maybe plays a part here, but that's just one company. It's not like it's the entire sector. got to be careful here, in my opinion. I think right now we're kind of in that potentially rolling over phase, which is always the toughest place, to trade directionally, I think, because there oftentimes is volatility. Forget about in a volatile market. And so I would expect maybe we see a little bit of volatility within this sector as it kind of tries to work itself out. If you go into a weekly chart, you can kind of start to make a little bit of a case that as long as it holds this support level, this swing low right here, that we're okay, or at least we're not bearish. And I would be open to listening to that argument. I think if we're looking at bearish perspective, that is probably what we'd like to see, unless we get a rally into that trend line or into some new resistance. But once that's taken out on the weekly chart, just like the daily, that upward trend is gone. Right. So I do think we can keep an eye on this price point. That might be an important area for the sector as a whole. Over in the utility sector, much to my happiness, it didn't jump right back up here today. Again, not particularly clean looking, but continues to overall continue to have that textbook trend, right? We haven't done really anything wrong. The only thing that's really kind of ugly is how fast we pulled back, right? If we had pulled back over the course of 7 trading days into here, where it was kind of slowing momentum on the way down, we probably love the way this looks. It's just happened, mostly yesterday, but quite a bit of selling over there here today. We're kind of hanging around that 50-day moving average, hanging around that trend line, hanging around that breakout point. Again, I don't think that this is giving us bearish signals personally. I think it's shaping up for potentially some bullish opportunities. But again, just like yesterday, with the way of the development of the price today, I don't think you can call it tomorrow. I think now, best case scenario, we see an inside candle, little doji, a little bit of upward movement tomorrow to kind of get that momentum shifted, and maybe we're looking at trading into it in the later part of the week. Obviously, if we take out this trend, take out that 50-day moving average, for me at least, that's going to kind of go out the window. So we're at a pretty important price for my own rules, at least within this sector. But at least we're still here today. I'm not unhappy to have gotten that pullback at all in the utilities. I was hoping for it late last week. I'm happy how we got here as a whole. I'm just not happy how fast we got here. Want to make sure we get that shift in momentum, get some buyers back into it before I start getting too excited. Over in healthcare, we breached that low, but again, the close is the close. And for so many of us here at Tackle Trading, that close is what matters. And I'm certainly no different, kind of rallying off of that intraday break where we did see some decent selling when we took out those lows to kind of close back, sitting at that support level. As we talked yesterday, if we cleanly break, and this is all of a sudden, you've got some news out there, with, and again, maybe it matters, maybe it doesn't, but the simple reality is traders are reacting to it, right? And that's how I always view news. I try not to have an opinion on anything that's not a chart. And so, and just be aware of it. But clearly that, that can be an impact within this sector. Not a lot of support. If we falter through here, there is still downside, in my mind, at least, within the sector, that just a couple weeks ago, we were talking about bullish breakout, right? And that's fine. We had some breakout opportunities and hopefully we were able to take advantage of them along the way, but that's a while ago now, right? So we've got some work to do to get back to that. As we kind of looked here on the weekly yesterday, I mean, that is pretty rough. If that breaks, that is not a good looking pattern if that support can't hold for us. And it continues to show weakness. While for a very long time, this was one of my favorite areas as a bull. I don't feel that way anymore. I feel probably I'm going to, here in a couple of days when I'm combing through the S&P 500, I'm probably going to find a lot more bearish setups that I like. So many of the bullish setups that were kind of looking interesting just a week ago, they're just gone. I can't see a scenario where they're going to get, into play, at least in the short term right now. It's unfortunate, but I love healthcare because it was being well behaved and made sense. So if it wants to be well behaved to the downside, I've got no objection to that. So over in the discretionary, much like tech, just kind of hanging around that old low, don't really think it's, it didn't give us any confirmation to the downside here today. We did close below that yesterday, but we're never to kind of able to carry that momentum, that seller's momentum, into today's trading, at least. Clearly it looks like they're waiting for the Fed. Again, not really a lot of support from here. If we take out this low from yesterday, or get some interesting signals on the intraday in the next couple of trading days, probably shouldn't be surprised to see us work back to this support level. That will be how I am approaching it, at least. Real estate has just gone for me to let it shake out. After the sell yesterday, we worked into that trend. We established some support. We're never able to get that momentum. Of course, yesterday got caught up and took out that support level. It's really hard for me to look at this as a good trade either way, to be quite honest with you. If you say you're bearish or bullish, I can both understand where you're coming from and would argue that there are better things to be looking at, no matter what side that you came, we're on right now. That will change. This isn't going to stay here forever, but it really is, with the way it took out support yesterday, everything that from a bullish point of view that we were really hanging our hat on is gone. But really, from a bearish point of view, has it done enough to get you on board? If it has, where's your risk to reward? Probably not there with yesterday's movement. So for me, at least, this is one that I think is best to leave be for the foreseeable future, as it kind of shakes out here in the next couple of days or next couple of weeks, probably more likely for me at least. So, and lastly, over in communication services, much like tech, much like the discretionary sector, just a day. Nothing to really see here. Your opinion probably shouldn't have changed from where it was yesterday, because, well, technically really nothing changed even slightly today. Little back and forth within the sector, but not a whole lot else to see. And we still continue to struggle, but to the sector's credit, it's still kind of holding that zone of support. So it hasn't broken down just yet. Might be opening up opportunities on either side. If we break to the downside, that would open up more selling opportunities if we're able to build up off of this floor and build off of some of that momentum it's been trying to build. Certainly I don't think it's given us any buy signals, but it's showed some form of momentum these last couple of weeks. Could be an interesting area, which is kind of nice, because at least for me, it's been very one-sided. Look for bearish retracements within the sector and call it a day for the most part as of late. So again, one of those days that the market probably needed it. After yesterday's selling, it definitely didn't make you feel like this is the bottom with its behavior today. But we know, going into the Fed tomorrow, traders can look for excuses, and it doesn't have to make sense. They don't have to be right. But there's a good chance that they might respond to that news one way or another tomorrow afternoon. So I imagine we'll be talking about that tomorrow. So I would be surprised if we're not. Over in the dollar, volatility continues to be there, but we do overall continue to hold our pattern as we have gone into that slow drift sideways type of pattern. For me, much like yesterday and the days before that, right now, I think the break is probably the easiest signal to work with. Kind of hard to trade in this messy area. Now, that doesn't mean there's not intraday opportunities with the different pairs, because of course there are. But when we're kind of looking at the dollar index as a whole, seems like a very the bounce off of the 50 I got, it happened very quickly. It was a tough one to take for traditional, so to speak, swing trader, because we kissed it on the intraday and bounced off and then ran all the way halfway to resistance. So it was a tough trade. Right now, I think for me at least, 90, this range is kind of how I'm going to treat it until it works its way out. A break either way, I think, would be a very interesting signal. Break to the upside as a buyer, break to the downside as a seller. Right now, I think for me, watching it hang out is more fun than trying to trade it. Over in the volatility index, we continue to have a lot of fear over there. There's no doubt about it. Traders are on edge right now. And I think we've seen that, pretty much everywhere across the board, right? Or at least from an equity point of view. We're not seeing that over in gold or anything like that, but in the equities market, we certainly are seeing traders are very quick to throw in the towel, right? At least on a day-to-day basis. working to the high end of the range. So volatility is still very much a part of the market. Fear is definitely a very much part of the market as we get into tomorrow. And tomorrow's kind of going to be the day, and then we're going to kind of start preparing for Christmas. So it should be interesting. Over in the metals market, gold continues to work up towards that 200-day moving average. Basically, there's a couple ways you can look at this. If you're already in it, this can be a profit-taking zone, right, as we approach that resistance. If you didn't do that, I would understand that. It could also be a place to convert or sell a call against your shares if you're doing long shares on GLD, or have a call option on GLD. Could be an interesting place to convert it into a bull call spread, in my opinion at least, because that resistance is there and it concerns me, because it always does. If you're looking at it from an entry point of view, you can look at it a couple ways. If we take out this high, that's going to be the textbook breakout point, right? And that will be an entry that some folks are taking. For me, I don't think that is the entry. I think you need to take out that 200-day moving average. You don't have to pay that much more for that confirmation and that peace of mind, which it would at least give me. So I still think that is our area. We should probably expect it to challenge us, of course, but we should also, prepare for it to potentially break tomorrow. Things shake out the right way at that Fed meeting. We see the dollar really sell off. We could be seeing gold break that as early as tomorrow. Not that we should assume that's going to happen, of course, but if that is something that we're working with, probably should play that what if out in our minds a little bit. But overall, really hasn't changed. The breakout continues to hold. If you're bullish in this, however you're doing it, I get it, and I have no objections to how you're doing that right now. Over in silver, after that nice run into resistance, we're just hanging around. I love how silver is developing as a potential breakout of that $15 mark. Obviously, that may or may not happen, but we had that nice strong run into it. We're seeing strength in gold. We pulled back at a very sensible location as profit takers came in, who came in off of these lows, closed out at resistance as they'd been doing, time and time again as of late. I really do like the break of 15. I've liked it for a while, but with the way the pattern has developed over the last 2 weeks in particular, I like it even more than I did kind of when we were looking at it back here. We've been talking about 15 on silver for a long time, right? As the buy side of things, for me at least. And I really like the way the pattern has developed. If we get that break, there is some room to run on it too. Whether we're looking at that 200-day moving average, we're looking at this old low. And I would argue, if we break, and we'll talk about it if and when that happens, I would argue we definitely want to keep an eye where we were basing back here. That was a nice level of support that when it broke, well, it got ugly really quick. So that will be an area that I will be monitoring if we ultimately break through that 15. Obviously, that's tough. Very well may not happen, but always want to plan accordingly. So not a lot to see in silver from changing of the guard type of a situation today. Did see some buyers off of natural gas, and I don't know if it was exactly why they were doing it, other than we kind of looked, we were testing that old breakout point. It wasn't much from a daily point of view. On the weekly, at least to my eyes, it didn't look like we'd held that break as of yesterday. Today, it certainly looks a little different. We pulled back to the breakout point and have shown some strength. When we look at it from a weekly perspective, it looks a lot better, at least as a tradable instrument to me. I still think this is a fairly difficult thing to be traditionally directionally swing trading right now. I'm really interested in seeing the test of $4 personally. I could understand folks that are buying off of this candle because it does look like we pulled back to the breakout point. It does, we have seen some upward movement off of that breakout point. For me, I'm interested in how it responds at $4 personally. And so that's kind of what I will be watching for going forward. Keeping an eye on this support level. Now that we've seen that upward movement, if that thing breaks, there should be even more downside. And again, natural gas is not a thing that everybody likes to trade. They call it the widowmaker for a reason. It can move and it can get you, but we'll follow along and see where we go. I think if nothing else, we have an idea that buyers are willing to still get into this thing at sensible price points, on the chart in the form of that old breakout. Because just because I didn't love the way it looked doesn't mean I'm right? I'm wrong a lot. And so buyers certainly were willing to come off of that here today. It's going to be interesting. I don't really see a scenario where I'm doing a lot with natural gas over the rest of the calendar year, but I do anticipate enjoying following along with it as the year progresses. And then lastly, last but certainly not least, crude. We are hanging out at $46 after of course, everybody sold, right? I mean, that was one of the, and I think Matt said it in the halftime show, that was one of the easiest trades we've seen in a while. That 50, everybody was looking at 50. Everybody, whether they were bears, like many of us here, were waiting for it to break. But even the bulls, I mean, that's where they were hanging their hat. That's going to hold 50. Very nasty. I think Justin, I'm not sure if Justin was with us today, but I think he over in the clubhouse was asking where you target to. He had it at 43. That's where I have it as well, at $43 is kind of the target. The real question is going to come down to, how do you want to manage if you're in the trade, obviously, how you want to manage it with a pattern like this. For me, at least, the whole thought process has not changed. Once we broke below 50, we should stay below 50. That 50 should be, and hey, Justin, good to see you. So, for whatever it's worth, I don't know if it's a good thing or a bad thing, but I'm looking at 43 too, my friend. So, but really the logic behind why we're here, if we're bearish in crude right now, or if we're bearish in a pattern that looks like this in the future, to me at least, the logic is now that we're below 50, we should stay below 50. If this rallies into $48 tomorrow, obviously, as a bear, I'm not going to like it, but it doesn't mean it's doing anything wrong. And so the real question I think you should ask, Justin, because I agree in that, 43, 44 range, I'd probably go a little higher than 43 personally, because that's kind of the most common number that I'm hearing and from other traders. So kind of beat them to the punch, if you will. But I think the real question is, are you willing to pay that? Are you willing to risk some of those profits? Are you willing to sit through that pullback if it goes that way, right? I'm not betting that crude's going to jump up tomorrow, but I also know from a technical point of view, if it were to rally into $48 tomorrow to $49 tomorrow, as uncomfortable as that would probably feel for those of us who are bearish in crude, the reasons that we're bearish in crude would not have changed. And so I think really probably the best question to ask yourself, Justin, is, are you comfortable sitting through that retracement? And if the answer is no, that's okay. There's nothing wrong with that. You can kind of, work a trailing stop. You can watch for something to develop on a shorter term time frame, such as the hourly, as I don't know, you guys know Coach Mark as well. Mark and I both kind of like, these shorter term averages over on me, especially within the commodities market, as potential exit points if you're not willing to sit through a deeper pullback. The 9, the 20, obviously the 250 are going to be strong too, but that can be a management method for you. We can also convert, if you're, we can convert into a spread if we're trading something like USO to kind of lower some of that risk as well. So yeah, scaling out always an option too. I like scaling out. I don't dislike the notion of converting into bear puts or selling some shorter term contracts against. It doesn't specifically have to be today necessarily, Justin. There's certainly no signs of life today on the chart, but certainly on the way to 43, it's not going to surprise any of us if it's not a direct free fall, and it probably won't surprise us if it is a direct free fall. All we have to do is have one more candle like today and we're at 43 tomorrow, right? So it's not completely out of the realm of possibilities, but we probably shouldn't assume that it's going to free fall just because that would be the easiest for us all to manage. I hope that's the way it goes because we won't have to really use our brains. And that's always a good thing, I think, when it comes to managing your trades. But scaling out, yeah, an excellent idea as well, Justin. Converting into a spread, tightening up the stop. It doesn't specifically have to be on my, hourly moving averages. It can be on whatever you personally like to use. These are good problems to have, right? Whenever we're having conversations like this means the breakout that we just got into, because these are conversations that happen in breakout trades, right? Breakout to the up or downside. It means the breakout is going really well. So these are the problems in life that we want. We got into a breakout. It got halfway to our target in a day. We have money to protect. How do we want to protect it? best conversation to ever have. So, and yeah, absolutely, Abel. It could, it wouldn't surprise me in the slightest, because again, who is buying this? I doubt anybody here. I don't know anybody. I heard a few folks saying buying at $50. Well, hey, they might have had a good idea, but that idea is gone, right? That's old stuff, So yeah, I wouldn't be surprised at all. I mean, I'm not saying it can't free fall into it. I wouldn't be surprised at all. But when it comes to managing the trades, I always want to think about the retrace, because I always want to think about the pattern that I'm trading. When the pattern, breakout patterns in particular, the whole thought process is, now that we broke resistance, it should be support. Now that we broke support, it should be resistance. And we have these fast moves to the downside. It's great, but then we have to think about how we want to manage. Are we willing to sit through that potential retracement, I should say? Well, some people are and some people aren't. And so that's certainly understandable. So yeah, I can't imagine who, I wasn't on board with buying at 50. I was getting on board with a short-term buy above 55. But obviously that's long gone. But I couldn't understand who was buying it at $50. I mean, the whole argument was risk to reward, and I guess I get it. If 50 held, there was a lot of upside if you were buying at 51. But I mean, it's only risk to reward is great and all, but if the pattern, if the charts are hideous, they're going against you, I still can't get on board with it. But yeah, whether we agreed with that or not, that's gone. Now they're probably thinking, it didn't even come close to resistance. And it really did us a nice favor, nice clean close below that yesterday, but not, a huge, candle, because we know crude can move. It could have been twice that size of a candle yesterday, making it that much more difficult to trade into, right? So closing just a little bit, but clearly below 50, continuing to show downward movement pretty consistently. Definitely shaped up to be a very nice trade, at least so far. I'll be keeping an eye on that 43. Like I said, I think really the questions that we have, and ideally we kind of think about these things before we're in the trade, because exactly, Abel, it did give us a really nice opportunity. But I do think the real question is, how do we want to manage the trade? And ideally, we have as much of that, laid out ahead of time, right before the trade, because it's always harder when you're in the trade, because, well, the last thing any of us who are bearish in crude right now want to do is close the trade tomorrow and see it at 43 on Thursday, right? We want to close the trade tomorrow if it's going to run back to 50, and then we'll go bearish again. But and if we are having that, in real time, it's a lot harder to, have the unemotional response. So be thinking about how you're going to manage all your trades. Like I said, these are great problems to have. That means we got into a good trade. That means it's moving our way. That means it's been a real easy run thus far. So these are the problems that we want in our trading lives, right? Especially as directional traders. Well, we made some money. Do we hang around to try to make more, or do we be happy with the money that we made? The only real thing that, I will say this. The only thing I will consider what I do or what anybody else who has crude does as being wrong is if they give back their profits. If somehow this nice winning trade turns into a losing trade. That's the only wrong answer. Justin scales out and it free falls to 43. Well, Justin, you should have stuck around the whole position, but good job. I converted into a spread and it falls quickly. Well, I should have not converted into a spread, but good job me, right? So it's only if we give our profits back. That's the only issue that we're going to have. But I don't think any of us here are going to be looking to do that if we're trading crude. Certainly a very interesting market. And you saw that hourly chart. I mean, this thing is, even by its own standards, it's very, very ugly. Everything is falling. There is no support. There is, and while 43 is that area that I think, in that general ballpark where most traders are looking, it was this, kind of this point back here on the weekly chart. I mean, that's still, $3 doesn't seem like a lot. Good Lord, we've lost 20 cents since we started talking about crude. So we've, I think it was above 46 and change when we started talking about it. Again, it's one of those things. Who the heck is buying this? I don't get it. I'm sure somebody might eventually. I'll never understand why they are. Should be interesting, but good problems to have. So that, ladies and gentlemen, will do our recap for the day. But as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell if you haven't already to be alerted to any videos we're doing over here. And be sure to follow us over at Tackle Trading on Twitter as well. If you haven't already, go check, aren't a member of our community over at Tackle Trading, get in there, check us out, come hang out, hop in the clubhouse, come test out our trial, see what we're all about. I think you'll have a good home with us. If you enjoyed the market recap, it's always helpful and appreciated if you do give it a thumbs up to let us know that we are on the right track over here. And with that, ladies and gentlemen, as always, thank you so much for your time. Happy trading, and I will see you all in the next one. Thanks, everybody.